go ahead and get out your mastery problem and make sure you're on page 53 of your textbook. So what we have been doing is recording transactions, but you've been having to make two separate T accounts every time, like cash and sales or supplies and accounts receivable. Well, you're about to do several different transactions, and so to save time, instead of recording two T accounts every single time, you can just create a T account for each account of this business. So down at the very bottom of page 53, it says Gardens Plus uses the following accounts. So what you need to do is, just like what I've done, is fill in these T accounts. So cash is at the very top, and they gave you more room because more of the transactions involve cash. So you're just going to start at cash and then work your way down. So then the next one would be accounts receivable dash Lee Chin, accounts receivable dash Ginger. And so anyways, you're just going to keep going down, following in that same list as in your textbook. Alright, then you can just finish that on your own. Let's go ahead and go to May 1st and look at that transaction. So it says we received cash from owner as an investment. So remember, I always say to start off with cash because it's just easier to know. And if it helps you, up here above your T account, you could always write plus for if you receive cash, and then minus for if you pay cash. Okay, and that would help you keep up with your debit or credit. So anyways, we received cash from owner as an investment. So since we received cash, we would debit cash for $3,700. And then we have to figure out what other accounts affected. Anytime you have an investment, remember that increases your owner's equity, which is your capital account. So we would credit capital because it's an owner's equity account. Remember, you always need a debit and a credit that equal the same amount. Okay, let's go into the next one. So May 2nd, paid cash for rent. So this time I'm paying cash, so I need to take it out of the credit side. So I would credit cash for $600, and notice how I'm just putting this all on the same T account. And then since I credited cash, I need to debit rent expense. So down here at rent expense, I would debit it for $600. So now I've got my credit and my debit, and I would be in balance. Remember that expenses are always debits because they decrease owner's equity. You're taking money out of your equity to pay for something. Alright, so then you're just going to continue listing out the rest of these T accounts and then recording those transactions.